I got to start with the same question I've been asking everybody else. We're looking at the futures; they're higher. Not yesterday, Friday, after the markets, they dipped after that very explosive press conference between the president and the president of Ukraine, and then they closed higher. Give us a sense. Why do you think that happened?
Look, it's been a messy week, so it's all in context of we sold off really aggressively for kind of 4 straight days, right? And a lot of the higher momentum stocks, the really good earnings momentum stocks, really got hammered to start the week off. So a little bit of a relief rally into the end of the week, off of a sell-off over the past few days. I think we just need some context here. Look, we're probably still in a bull market. We're just acutely sensitive to news flow right now because we're fully valued. So good fundamental stories, I think people just kind of stepped in to buy it, just after a few days of selling pressure.
All right, so with that in mind, you think we're still in a cyclical bull market. What's your word of the day?
So it's forest. So in full context here, don't miss the forest for the trees. Look, we're talking about uncertainty. It's probably hard to count the number of times your previous guests have said uncertainty. That relates to the consumer, taxes, tariffs, go down the line. The thing is, fundamentals have been so strong. We see a lot of efficiency gains. Q4 was probably one of the best earnings seasons we've had on record. And even with all of that uncertainty, we just kind of had marginal cuts to 2025 estimates. So fundamentals still really strong. That's still really good for stocks medium term.
By the way, we are seeing a big bounce back. A lot of stocks that were selling off last week, kind of bouncing back. I was just looking at Palantir, shares up over 2% right now. With that in mind, I want to get to your pick, Drew. What is your pick and why?
So it's Pfizer. So high level, this payments and fintech company is in a theme that is just completely underappreciated. So fintech to us screens as a really attractive growth theme. It's been a really strong performer for the last 2 years, but the theme everyone wants to talk about is AI. So when you really get into this, you have growth at a reasonable price for this stock. We think the market in the next 3 years is pricing in like $13 a cash flow. Analysts think we're probably going to get something more like 14%. This company has great operating leverage, really good cash conversion, and should actually expand margins by 125 basis points this year. So put that all together, that's another really good fundamental story in this market we think you can buy into.
All right, so you think this is GARP, and that's what everybody's looking for, especially right now with the market a bit frothy. But on the other side of the coin, some people are looking at alternatives outside of equities. We had an earlier guest that was suggesting tips, Treasury inflation-protected securities. Do you think right now is the time to invest in bonds, specifically those type of bonds?
So honestly, I think you have a little bit more of a neutral setup. How I'd kind of spin this, Frank, from our equity seat is if you want to buy equities right now, you need to see revisions move higher. So that's 25 in the out year numbers. If those move higher, your chances for equities to continue to outperform bonds is relatively high. If we get cuts to the out year numbers, then you probably want to be, a treasury buyer at this point.